All right, well, those are the big headlines we're tracking for you on ET now. But first up, let's address taxation. The last day to file your FY20 income tax return. This, of course, after several rounds of delaying the deadline, is now the 10th of January. Still, I have seen some calls on social media asking for yet another extension of the deadline. However, for now, it is the 10th of January. This has been pushed by about 10 days from the erstwhile deadline of 31st of December, which means that you guys have roughly about 2 days to file your returns. And the reason why we are doing this return filing show today is because it's best to not wait till the last minute and have suddenly an exodus of individuals trying to log on to the income tax website, which more often than not some leads to technical glitches. So it's best to file your returns between today and tomorrow. So we'll talk about this entire process. We'll address, like I mentioned, your questions and queries as well with Saurabh Mohta. He's the co-founder with the Center for Consulting LLP, and he joins us now on the show. Saurabh, very good evening, and thank you so much for joining us today on the Money Show. So to start with, Saurabh, let's start with the ABCs of filing your income tax return. I'm sure many individuals sort of want to get to know that. What, and let's speak purely from an individual standpoint, not HUFs, not corporates. What should be the kind of income tax return that an individual should file based on their sources of income?
All right. So first of all, Mubina, thank you for having me on the show. Just addressing your question, a lot of different forms have been prescribed. There are about 7 different forms for different entities and different individuals that have been prescribed. Generally, these forms are prescribed in the month of April after the year ends. But this time, thanks to COVID and everything can be blamed on 2020, these forms were notified slightly late. So everyone dealt with these forms in a slightly delayed manner. But simplifying it, we have different ITRs, starting with ITR number 1. Now, that's the most simple form, and in case you're a salaried individual, and a lot of people in metro cities and tier 2, tier 1 cities are salaried individuals, and if you have some interest income, so let's say you have some money in your bank account, plus you have, let's say, a small house property in your name, so that's the simplest one return to file. So ITR 1 is like the base level and is the most simple return to be filed, especially with banks paying you interest. They deduct TDS on FDs. With salaries, the TDS is deducted already. So that's a slightly simpler return to file, and that's the base return. That's ITR 1. Then we move on to ITR 2. Now, suddenly in ITR 2, there are a lot more things that one could do. So if you're, again, still a salaried person, still having interest income, still having a house property, but let's say you're a director in a company as well, or you have shares of an unlisted company as well. So let's say you have a private limited company of which you have shares of. So things get slightly more detailed here, and with respect to foreign assets, so let's say you have investments abroad, etc., then ITR 2 is for you. So ITR 1 is slightly more basic for a basic salaried individual, but the moment you have things like foreign assets, you're a director in a company, then you move on to ITR 2. Now, ITR 3 and ITR 4 are actually some things that the majority of India will be looking forward to, because the moment you go to smaller towns and you go to villages and you go to other towns, there are a lot of people who do small businesses. So right from that grocery shop in your neighborhood to a really big ITES company, they're all filling ITR 3 and ITR 4s and ahead other ITRs, because that's where we start off with PGBP, that is business and profession. So if you're a doctor, if you're a chartered accountant, or if you're a businessman, and then you got to file ITR 3s and ITR 4s. 3 and 4s, again, you can also have capital gains. A lot of people, besides their business, they also trade in, let's say, gold, or they trade in commodities, or they trade in shares. Then if you made some capital gain, then it becomes imperative for you to select rightfully either ITR 3 or ITR 4. And then 5, 6, and 7, since you said that we are focusing more on personal income taxes, I refrain from talking too much around those. But 5, 6, and 7 are for entities like LLPs, partnership firms, if you're a company, or if you're a political party or a registered charitable association, then you'll be filing ITR 5, 6, and 7 respectively.
Okay, fair enough. And now, just sort of to ensure that our viewers do carry out this very important activity, it's an annual activity, tell us what are the repercussions of not filing your income tax return on time, Saurabh?
All right, Mobina, very good point actually, and something that everyone should know, that the moment you miss the deadline, so I'm just going to simplify it for a lot of viewers who are not properly tax experts or who are probably filing their income tax returns for the first time. Just a simple word of caution that if you don't file your income tax return by this due date, and if your income is sizable, that is above 5 lakh rupees, then you have to first and foremost pay a penalty of 10,000 rupees, and there is no leeway or respite from that. So a 10,000 rupee penalty, even if you file it on the 11th of Jan, you have to pay a 10,000 rupee penalty. Having said that, if your income is less than or equal to 5 lakh rupees, that means you're not a high earner or a high income earner, then your penalty is 1,000. But nonetheless, 10,000 or 1,000 rupees is a penalty, and that's just to start off with. Besides that, one more thing that users and your listeners and the people who are viewing this should know is that the moment you file your return late, any losses that you have, let me simplify it. So let's say in the month of January, you bought some shares, and because of COVID in the month of March, you sold the shares at a very, very, lower price. So you have a loss there, and that loss ideally can be carried forward and set off either in the same year or can be carried forward to the next year. But the moment you don't file your return on time, so the moment you miss this 10th of January deadline, whatever loss that is cannot be carried forward to the next year. And that's going to be a very big deal, because a lot of people I know, and in my clients as well, a lot of people have suffered losses in the stock market, especially till March. So in case you're one of those who wants to carry forward your losses, so next year's profits can be set off against those, then you've got to ensure that you file your return on time. Besides that, guys, so there are two things, penalty and this carry forward of loss, which won't happen. The third thing is the Income Tax Act has a section called 234A, but without getting into technicalities, it's a section which says that in case you file your return late, then there will be a penalty at the rate of 1% per month on the tax that you need to pay. So in case you need to pay any tax after filing your return, then on that, a 1% penalty per month. So even if the delay is for 1 day also, you need to pay 1% per month. That's not going to be very sizable for most of us, but still it's something that you need to pay over and above. Other than that, guys, if you're looking for a refund, in case your income tax return filing leads to a refund, why delay a refund? Get the money on time. The government is being very proactive in issuing refunds very fast, so we should take advantage of that. And in case you need to actually give your return somewhere, submit it somewhere, you should have it done in time. So I think these are something that you should keep in mind. Else that 10 January deadline, if not extended, will lead to these repercussions.
Okay, well, all right. That's all you need to know. And at least to help you sort of kickstart on your income tax return filing process, the first step usually is to assess that what form will you have to fill out. And then, of course, there are a series of processes that you need to ensure you do. And yes, once again, I'd like to tell all our viewers that you can send in your questions and queries. And, we have Saurabh Mohta who will get them answered on if you are filing your income tax return right now and you've come across a hurdle, send them in. You can write into us on themoneyshow@etnow.tv and we'll get them answered. One more question, Saurabh, before I actually move to the viewer questions and queries. What are the new disclosures that have come about in FY20's return?
So that's another really, really good question. Every year, the government as well as the ministries endeavor or urge is to get as much information as they can from us. So this time as well, no surprises there. Every income tax return has sort of expanded itself. There are more drop-down menus now, and they ask us for more information. I'll give you simple examples. An example could be that now when you're trading in shares and listed shares or anything that you pay on STT on, in that case, there's a section called 112A. They want details around that. If for people, this might not apply to all viewers, but in case you are basically a director or a shareholder in a foreign company and you're getting dividends from there, you need to give details there. Another really, really intricate thing that everyone should keep in mind, because a lot of Indians now travel abroad. In case you're doing any foreign travel on which you spend more than 2 lakh rupees, that detail is now sought by the income tax return. Or if you have electricity bills totaling up to more than 1 lakh during the financial year, even the government wants to know that, as well as in your current account, if you deposit more than 1 crore rupees, if you have deposits not cash deposits, just overall deposits of more than 1 crore rupees. The government wants to know that as well. The idea is the government wants to identify the big spenders. They don't want to chase a small fish. They want to identify the big fish and they want to chase them. I think that's the agenda, and that's the reason these are the intricate new details that you need to fill in. Besides that, all trusts, considering that we're speaking on personal income tax, but I should mention this, that all trusts now need to get registered afresh under a new section called Section 12AP. Now, in that case, you need to give your declaration in that form for trust, whether how have you proceeded around that registration. These are some of the things. Other than that, small things like new depreciation rate, new disclosures around your foreign assets and your foreign holdings also have to be there. Overall, have there been any new additions? Yes, a lot of additions in each form. There are some more additions, and the agenda is only one thing. The government wants to know what are you spending on and what are you investing into. So these are the two agendas of the government, and that's the reason in every form you'll see some of the other points being added.
All right. Okay, well, let's get on board your questions and queries then for Saurabh. And we have a very first query that's coming from Anande Hati. He asks you, how do I pay the tax which I have to pay after submitting my return? So, you briefly alluded to this, Saurabh, in the earlier question. You just spoke about how the penalty will be high. But yes, I mean, if you have a tax to pay, you have to pay it. So how do you go about it, Saurabh?
All right. So good question there, actually. And this is something that a lot of people will be facing, especially people who do business. Let me just bifurcate people. People who earn salary income generally have the tax deducted at source. So they don't land up paying a lot of taxes. More or less, they get some amount as a refund. But for majority of Indians, if you step out of Bombay and you go to smaller towns, you'll see a lot of small businessmen. And when they do business, there is no one who's deducting TDS for them. So when they calculate their tax at the end, and like right now, when they're filing their return, they might have to pay some tax. So Anand Dehati, answering your question specifically, don't worry. Go ahead, put all the details, or ask a chartered accountant to put all your details, your incomes that you earned, the investments that you made, the tax saving investments that you invested in, put all those, determine your tax liability and submit your income tax return. Your income tax return does not have to necessarily go with the income tax. So in case once you file your income tax return and there is some amount of income tax that you need to pay, it's called self-assessment tax. Besides the TDS, besides the TCS, besides the advance tax that you might have paid, this is some amount that you need to pay now. You've assessed it yourself, and hence it's called self-assessment tax. And it's a pretty simple procedure. Once you file your return, within a period of 30 days, you need to go online and you need to generate a challan. So I don't have the link right now, but if you could also show our viewers the link, you could just go to your income tax website, generate the on the challan, 280 number challan. You need to select the right option of self-assessment tax. You need to put the amounts. You need to pay it through the bank. And just like you do any online payments, you need to make a payment. But of course, only two modes here. You can either use net banking or you can use your debit cards. No credit cards, unfortunately, to be used for making that payment of tax. And once you make that payment of tax, you get a receipt. Like any payment that you make, you get a receipt here as well. And the receipt has a couple of numbers, including a challan number and the BSR code of the bank. And that is the proof that you paid the tax. But mind you, this has to be done in time. If you don't do this in time, then your return gets a reply back from the income tax department. There's a specific section called section 139(9) where they say that this return is defective because although you need to pay the tax, you've not paid it along or within that specified time date. So you need to ensure that once you file your return, if there's any tax payable, that has to be paid within a period of 30 days. And challan 280, I repeat, challan number 280 is something that you should look forward to. But it's a very simple process. Don't worry, just go online, go to 280, fill up the details, and you'll be sorted really soon. It's just a normal banking channel payment like so many others that we do every day.
Okay. Very quickly, our next query. Adi Raja Singh says, I have some foreign stocks in my portfolio. I'm a salaried employee with an MNC and have interest income. I've got no house property of my own and live on rent. What return form should I use?
So Adhiraj is a salaried employee, and he has some foreign stocks in his portfolio, which is a very unusual, not unusual, but is not a very common sight in Indian portfolios. So we usually have Indians who invest in the Indian stock market all out, but we don't have too many individuals who go abroad and who invest in the foreign portfolios. But since he has that, then ideally ITR 2 should be something that he should look forward to. Since he's a salaried employee and he has some foreign assets, etc., then ITR 2 or probably for that matter, even ITR 4 is something that he should fill in. But some details that he should definitely know is there is a drop down which is asked for foreign assets. He should take that as yes, and he should give details around the buying and selling of those foreign assets. So you have to determine the capital gains tax of the foreign assets, and considering he's a resident here, he'll have to pay tax here as well as in the country that he's earned. He might have to pay tax there as well. So somewhere he has to take advantage of some relief under double taxation because he'll end up paying tax in both the countries. Adhiraj, anything else? No house property, so that's okay. You're a salaried employee. If you're a salaried employee, most of your taxes would have already been deducted. So I don't think there are any repercussions or interest, etc. on your part. Your interest income, again, if it's a fixed deposit interest, TDS would have been deducted. So just be careful about your foreign portfolio. Just ensure that the buy and sell, in case you're trading, in case you're investing, you just need to disclose it. But in case you're trading, the buy and sell has to be correctly disclosed, and you need to pay the appropriate taxes on them as capital gains.
All right. Well, I think that's all the questions we'll be able to take today. The crucial point over here is that ensure that you sit down to file your income tax return right now. Don't wait till tomorrow or day after. It's better to get it done with right now. And we promise you the process does not take very long. On that note, Saurabh, thank you so much for joining us today on ET Now and helping our viewers as well out with their questions and queries on, income tax return filing.
All right. Thank you, Mobina. It's a pleasure. Thank you so much and all the best.